GRT at the time of this recording is attempting another breakout to the upside after we continued to hold above our key area of support that lies between the 0.1696 and the $0.146. And at the time of this recording, we are now holding above the 20-day MA here on the 1-hour chart, and we are now attempting a break above our next key area of resistance above the $0.1882. And on today's video, I will be discussing my breakout target areas and also give you key areas of supports that you need to continue holding above. I will also be discussing my long-term price prediction analysis, so make sure that you stick around till the end of the video. And for those of you that might want to take a trade, you can check out BitGet, which is my go-to exchange. And you can see that on sign up, you can now claim a welcome pack of up to 6,200 USDT. And all you need for registration is an email and a phone number. Getting back to the charts, I want to start the video on the 1-hour chart by first explaining this additive structure that I have here on the charts, where you can see that from the lows that we made on the 4th of November, we started a very impulsive movement to the upside in a move that has now peaked above the $0.2106, in a move that completed the formation of these larger additive count 1. And after we peaked in that wave 1, we started a bit of a short-term pullback in what I have been terming as a corrective structure in an additive count 2, whose minimum target areas I have marked here on the charts using this red target area, an area that I came up with by connecting the fibs from the low of the first wave to the high of this wave 1, giving me a minimum pullback target area between the fib level 0.5 and the fib level 0.78. And you can all see that we are yet to fully maximize this target area, and whatever is playing out at the moment is that we are seeing a reaction of the area between the fib level 0.5 and the fib level 0.382, which is also a minimum target area for a second wave, though we will have to consider that as a shallow additive count 2 to the lower side. And there are high chances that in the next coming hours, if we manage to break above key areas of resistances, like the area above the 0.1882, flipping it back into support, and also manage to break above the high that we made in this wave 1 above the $0.2106, there are high chances that we are going to see a very impulsive movement to the upside in an additive count 3, whose minimum target areas can be given by connecting the trend-based Fibonacci from the low of the first wave to the high of this wave 1, then dragging the fibs to the lows that we have at the moment for the second wave, and that gives me a minimum target area for the third wave at the fib level 1.618, and that lies above the 0.3055. Then we can expect a wave 4 and then continue pushing even higher in an additive count 5. We also need to have a worst case scenario that can play out in case we get rejected at our key area of resistance, and maybe at some point we also lose that bullish momentum to continue pushing higher. In case that plays out, then I will be expecting to see the graph giving us another pullback to the lower side to fully maximize the red target area, give us a low for the second wave within this area, continue holding within the area before we can finally see a reversal to the upside in an impulsive additive count 3. So that is the worst case scenario that we need to have in mind in case we don't see a break above our key area of resistance, and maybe at some point we lose that bullish momentum. And that is all I'm expecting on the short term. Jumping to the daily chart to give you my long-term price prediction analysis, I still believe that we got our bear market lows last year and started an impulse to the upside in a move that peaked above the 0.4947, completing the formation of these additive count 1. Then we started a corrective structure in the formation of a larger additive count 2, whose minimum target areas I have marked on the charts using this blue target area, an area that we have now fully maximized, and there are high chances that we have a low in place for the second wave, and in the next coming weeks we are going to finally see an aggressive bounce to the upside in an additive count 3, then expect a wave 4 and then continue pushing even higher in a negative count 5, possibly taking us back above the dollar mark. We also need to have in mind that for that movement to play out to the upside, we need to see GRT holding above the fib level 0.88 by connecting the fibs from the bear market lows to the highs above the 0.4947, where you can all see that the fib level 0.88 lies above the $0.127. As long as we are holding above that area on the Fibonacci, there's a very high chance that we are going to see that bounce to the upside in a wave 3. But if by any chance we get a massive pullback, losing support above the fib level 0.88, then that will be increasing the likelihood that we are going to see a total breakdown move, giving us a reset of the bear market lows that we made below the 0.0765 in the next coming days. So that is all I'm expecting on the short term and also on the long term. And let's be patient and see how that plays out. And I will be keeping you up to date.